we'll get into today's topic. So we were in investor mode. Let's switch back into primary mode here. Down payment assistance, also known as DPA. Definitely a very hot topic, especially as homes have become more, unaffordable or less affordable than ever. So definitely a good topic here, as our borrowers do need to take advantage of these programs often when we're in a situation like right now. Hopefully, again, we see some rates drops later this year, but for right now, down payment assistance definitely can help when we need a little bit of extra juice there in the transaction, and is always a great option. Jose is going to present our options. Remember, we're always going to focus on the national options, not the local options. So Jose, let's first talk about national versus local, and then let's actually check out some of the options that we recommend.
Awesome. Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. So, let me discuss a little bit about what we can work. It's very important to note the difference in the DPA when it's a local option and a national option. Local option, which we're talking about, like a state option, county option, city option. Those are specialized programs that will usually require the loan officer as well as the lender to be approved, which means, remember, in files where we're not the lender, where we're the broker, that means whoever is the conduit that we're submitting the loan to has to be approved. When we're the lender, we have to be approved as well as the loan officer there. Those localized plans also tend to require restrictions on compensation, which may complicate matters because it's tough to have your comp set one way for one type of loan program and then not for the rest of the company production. Logistically very difficult and could cause legal ramifications as well. The national programs are programs readily available to offer where no approval of the MLO nor approval of the submitting lender is required. So we can easily offer those and combine them with the loans that we have to offer. Now, one thing very important to note when you are structuring your down payment assistance quotes to consult your borrower, make sure that you are selecting the first mortgage from the right pool of options, because you cannot offer a regular FHA loan that doesn't have DPA ability with one, because there's going to be a difference in the rate. The FHA product that allows to be combined with down payment assistance does have a higher rate associated with it. So it's very critical to note. You just can't grab a regular FHA loan rate and then say, oh, and here's the DPA, because you're probably going to have an interest rate 1 or 2% higher in the actual one that you can offer than in the regular FHA, which is why we always like to state that on these loans, see what option is available first for par plus pricing, also known as lender credit, right? When you're looking at the rates on a regular FHA loan, you can usually find a rate if it's a good credit score borrower, no issues, right? You could usually find a rate that is going to give some amount of lender credit, be it a half a point, 1 point, sometimes 1.5 points in lender credit for an FHA loan. That lender credit is used by the borrower for their closing costs. So yes, a little bit higher rate, but not as high a rate as you may see in the regular DPA loan options. Now, one other thing, last night we had our training on the changes that the real estate industry is going to be facing with buyer agent commissions now not necessarily always going to be payable by the seller. So down payment assistance or closing cost assistance, which is a separate option that I'm going to show to you, can be used to assist with that, right? If no other options exist, if you can't get seller credit, if you can't figure it out any other way, then this may be an option for the applicable borrowers to get some extra funds into their pocket to be able to cover what could potentially be an extra 3% of the purchase price in buyer transactional expenses. So let me share my options with you today. Pretty cool options here, and then I'm sure you all will be able to benefit from this. So our first option is a DPA FHA purchase, 96.5% LTV on the first mortgage. This is a forgivable option with a minimum 620 credit score. What's important to note on the forgivable option is no payment is ever due. It is a second mortgage. And after 60 months, or after 60 payments, right, 60 months, if the loan is current, it will be forgiven. I did mention minimum credit score for this option is 620. So you'll see what I was talking about the rate, right? Because Nick was showing some rates earlier today that were quite a bit lower than this for FHA. But for DPA, this is what we got. This is with 3.5% of the sales price in down payment assistance. So you're looking at 8.75 with our lowest cost option of 0.875, taking it down to 7.625 lowest rate option. Now, before I proceed, you may ask yourself, why would we go with a repayable option instead of this quote unquote free forgivable option? And the reason is going to be the rate, right? The rate is going to be at least 1% lower on the repayable option, and in most cases you could have a payment to $250 lower than the forgivable option. But keep in mind there is a payment made on that 3.5%, but it's not going to be $250, $260, which is like the difference I was calculating yesterday between the forgivable and the repayable option. So here, our forgivable option. Now, our repayable option, and let me keep this here because I'm going to click over to it in a minute. So now our repayable option is minimum 660 credit score, and again, 9.99% rate, structured as a 30-year loan, 9.99% rate, with a balloon due in 10 years. So at the end of 10 years, if that loan hasn't been paid off, it's due. So that will probably be the time to refinance, if you haven't refinanced it already. And if they don't have the money, they'll probably want to refinance out of that loan. So you can see the difference in the rates though, right? This is 3.5% sales price forgivable DPA. 7.75 is almost at par. That's our lowest cost option versus on this one, we don't have any option close to there. 7.75 is costing 2.375, so it's 2.125 points higher in cost over here. So it does eat up more of your DPA. If you want to get the lower rate, you're going to be almost where you started, because this is 2.125 points for that rate versus this one, which is 0.25 points. So now you can see why someone may choose to do that, because here, lowest cost option here is $35.17 on the payment. Lowest option over here is $38.62. So $38.62, 35. Wow, that's $360 difference. So you can see why someone would choose the forgivable option. The other thing is maybe they don't qualify at that higher interest rate. Correct. So a lot of reasons why. All that glitters is not gold, right? So now we got our DPA purchase, same LTV, same minimum credit score, but in this case, it's a little bit of a different twist. Same second loan, 30-year, 9.99 rate with a balloon due in 10 years, same minimum credit score, 660, but in this case, you're getting 3% closing cost assistance. And the difference, as you can see, is in the rate, right? Because here, for a similar cost as the other one, we can get a little bit lower rate, maybe 7.625, 7.5. This is a half a point. The other one was a quarter point on the other option, forgivable, repayable that I just showed you. But here, 7.75 with a lender credit, which is pretty cool. Get a little bit of extra DPA right there, or you can buy it all the way down to 6.75. So now we have the same closing cost assistance. This time it's 4%. Same scenario, just a little bit more money. So now you see pricing changes a little bit. You got 7.75. I don't know how that one slipped in there, but 7.75 is our lowest cost option at 0.375. So this is still a very good program. Now you get 4%, right? 4% instead of 3. And I would say the difference is about a half a point in cost. So you get the 4%, but you really get half a percent more because you have a half a percent more in fees, more or less at the same rate. And now we have our 5%. Same option, same program, closing cost assistance, but now we're at 5% of the sales price. Same second loan, 30-year, 9.99 with a balloon due in 10. But now we do see another difference here. We have another 0.625 difference here. So you get one more percent, but this is 0.625 cost more than the 4% option. So you see how this works. With every tier, you get a little bit less. So now letting you all know, we do have also in the national program a USDA option. Most of you may not know that, but our DPA can be this national DPA, down payment assistance program, can be combined with either an FHA loan at 96.5 or a USDA loan at 100% LTV. Pretty cool. 620 minimum credit score again for a 3.5% DPA assistance. So this one, should be able to cover pretty much. This could be a cashless transaction for your borrower, right? 100% LTV on the first, and then get 3.5% DPA on this $500,000 loan. I don't really think your closing costs are going to be more than $15,000, $17,000, $18,000, unless they're in Miami and your insurance is $11,000 or $10,000 or $9,000 or $8,000 or something crazy like that we've been seeing lately. Here you're at 8.75% lowest cost option, 8.375 lowest rate option. And then our last example here is our repayable DPA. That other one was forgivable. This one is repayable. And unless it's a quirk in the system, same rates for the repayable and the forgivable options. 8.75 lowest cost option, 8.375 lowest rate options. So we're seeing a lot of agency loans come through the pipeline, especially a lot of FHA, a lot of VA, some USDA also. So keep in mind the DPA that we can use here for USDA and FHA, how we can combine these programs and meet your borrower's needs, including the newest obstacle, buyer agent commission paid by the buyer.
So we'll go ahead and wrap it up then. Appreciate everybody tuning in. Remember, we do this at 11 a.m. Eastern every weekday, where we go through the live mortgage rates and then do a deep dive into a different loan topic. So we'll have a new topic for you tomorrow. Thank you, everybody, for tuning in. We'll see you tomorrow at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Take care, everyone.
Thanks, everybody.